Good Monday morning to all of you. Wanted to talk briefly today about, in general, the two ways that we buy or sell companies. First of all, we have what's called an asset sale or purchase, where someone is purchasing the assets of another business. They're purchasing the equipment, the inventory, the accounts receivables, and what other assets they may have on their books. When someone does this, they are able to mark those assets up and get what we call a step up in basis to fair market value, and they can start redepreciating those assets all over again. That's in general an asset purchase or sale. The other way is what we call a stock purchase or sale, and in a stock purchase, the buyer is buying all of the assets and all of the liabilities exactly how the balance sheet reads. So if the assets are already depreciated, the buyer in a stock transaction cannot step up their basis to fair market value and start redepreciating them all over again. But there are certain circumstances where we want the best of both worlds. We want to be able to buy the stock of the company, but we also want to get a step up in basis so that we can redepreciate those assets. These cases are, for example, when a company has contracts, and if we sell the assets of the business, we're not going to be able to transfer those contracts into the new name. Maybe they're state contracts, maybe they're federal contracts, maybe they're contracts with large corporations. This is when we see this happen. One example I did one time was a whitewater rafting company. The federal government licenses and regulates the rafts that are on the whitewater federal waterways. In that case, we wanted to buy these, the buyer had to buy the stock of the company, but the buyer also wanted to get a step up in basis on the rafts so they could start to redepreciate them and get that tax benefit. There's a little known Internal Revenue Code section called 338H10. If the seller is an S corporation, meaning they're a flow-through company, they file an 1120S tax return. And remember, if you're a limited liability company, you may still be taxed as an S corp filing an 1120S tax return. If the selling entity is an 1120S corporation, under Code Section 338H10, a buyer is able to buy the stock of the business legally, but for tax purposes, mark those assets up to fair market value and start redepreciating them over again. It's an excellent tool when we are potentially buying or selling an S corporation, again, that has something embedded in it that makes us not want to just transfer the assets, but to also transfer the stock of the business. I just had this happen in one of our transactions in one of our local markets, and I wanted to share that all with you today. Again, it's section 338H10. There's a lot of literature out there. If you have any questions or comments for us, please email us at info@taxplanning.com or call us at 618-997-3436. Have a great week.